Well, hello, everyone. This is Ian Thomas with Superior Ag Insurance. Really excited to chat with you all today. We've got some great people on the line with us. We've got Nathan Coleman and Lisa Graziani. So, Lisa, would you go ahead and take it away and give us a little introduction about yourself and what you all do?
Hi, Ian. Thank you for having us on today on the show. Just wanted to give you a brief introduction of what we do here. First off, we are located in Chicago, Illinois, and I did attend college there as well at DePaul University, and just started in the business back in the 90s, trading mainly in equity markets, the Dow, NASDAQ, and then kind of transitioned over to commodities about 10 years ago, and really enjoyed that. And what I really enjoyed about the business the most was learning option trading. I really was impressed how you can buy into a position without having to load up, and it was much more cost effective buying long calls and puts. 15 years later, I started here at Heartland Management next to the Board of Trade in downtown Chicago. Been here for 10 years, and we are a guaranteed broker. We clear through ADM, Archer Daniels Midland, and our main concentration is with livestock producers all over the country and grain growers, mainly in Texas, Kansas, Colorado, Nebraska, Iowa, Oklahoma, Arkansas. You get the drift. We work with several large feed yards all over the country who are also backgrounders, some are, and cow-calf operators and ranchers. And we help them hedge and trade their cattle and grain. So we trade mainly feeders, fats, corn, soybean, and wheat. Then we recently transitioned to Livestock Risk Protection insurance. We are now offering that as well. We found many benefits offering LRP, very similar to a put option, but a little bit better advantages. Typically, we're finding that these LRP options expire, give you a longer shelf life than a put. And also, it seems like the floor is raised with them for higher protection as well. And the best part about this LRP we found is there are no premiums due until after the policy period ends. And we also, the government is subsidizing this program up to about half the premium on some of these LRPs. So we're real excited about it, and we're explaining it to our customers. It's fairly new to them as well, but and we love it. Nate, what do you think?
All right. Hi, everyone. My name's Nathan Coleman. I'm the owner of Heartland Management, and I grew up on a small dairy farm in Northeast Ohio, Worcester, Ohio. I graduated Ohio State and got a degree in agriculture economics, and that's where I got my interest in the commodity markets. After I graduated, I moved to Chicago to work on the floor of the Chicago Mercantile Exchange in the cattle pit, and worked on the floor for a few years. And then with connections I made there, I started on the brokerage end up in the office, and have been working with cattlemen and cow-calf ranchers ever since. So I've been doing this for over 30 years, and always been able to stay with my agricultural background, and I've really enjoyed it. One thing we like to do with these LRPs is we use the futures options in conjunction with the LRP. We'll sell some call premium to help pay for the LRP, which will synthetic short position in them. We've traded the futures and are very familiar with it. It's just another tool to protect themselves. So what, in essence, is what we do is we'll get a floor in the market, and we'll have a ceiling, and the ceiling will pay for the floor. And I always like to tell my customers, if we go through the ceiling and you have the cattle, that's sometimes the headache you want to have. But we'd be happy to talk with anyone in more detail about it. And but we are very excited to be working with Ian and on the LRP, and it's been a great relationship so far, and definitely gives a lot of opportunity.
Well, I really appreciate everyone's introduction, both to Lisa and Nathan, and we likewise are extremely excited about the relationship we have at the moment and what we're doing, and just learning a lot from you all on the commodity end and the experiences and the expertise that you have there. And one thing I kind of wanted to jump back into to you both here is if you all would feel comfortable maybe just giving a general overview of the of how option works. A lot of my LRP customers here and farmers are asking me, well, what else can we do, or how does the option market work? And we've got a great opportunity to talk to two seasoned experts here. So if you all would just care to give us something general, a little bit of education on I can follow along, but if you start talking long and short, well, we might lose a few of our listeners. So
Okay, in the option markets, there's two types of options. First one is a call, which will give someone the right to buy at a certain price. So calls are typically bought above the market in anticipation of a rally. Now, if you want to be, there's always a party to the other side. You're capable of selling calls if you don't think the market has a major rally coming. You can short the option, short the call. And the other option is a put, and that's moved to protect against price decrease. And that's similar to what the LRP provides. And like right now, for an example, May feeders are trading at 174.72. You're capable of buying usually in every $2 increments, like $1.72 put, $1.70 put, $1.68 put, where you would have floors. And the LRPs work in that manner where you're able to buy a certain floor. And if the CME feeder index drops below that floor, then your coverage kicks in. So we use the options in conjunction with the LRP to help lock in certain price levels. It's something I could easily send out additional information to anyone who's interested, but it's definitely another tool to use.
perfect.
Yes.
Perfect.
We've also
Yes.
sold out of the money upper level October cattle calls recently, the 150 strike, thinking we, seasonally come fall, well, we won't break out past that 150, collecting over $4. So you would add that on the strike, it'd be a 154 break even technically. And it's kind of a good problem we want to have, right, Nate?
There's just so much uncertainty out there that we're kind of encouraging producers to take a little protection right now. Just a lot of global pressure right now. And it just makes sense to take a little protection for producers right now.
Absolutely.
Right. One question I have for you, either Nathan or Lisa, with your clientele that is familiar with options and futures, I know we talked briefly there about the benefits of LRP, but do you find now that this has become a little bit more advantageous of a product with being able to pay for it at expiration, when we should be selling these cattle and settling on cash? Do you find that more producers that were having an interest in it that might have been strictly using futures only or options only? Or are they starting to look at this and say, wow, this is a good tool in the toolbox? Or is it, what do you all find there?
There's been a lot of interest, and the interest is growing. The interest probably started in the feeder cattle market on the LRPs, but the fat cattle market is definitely increased interest. And especially at some of the levels we're getting to with this recent price rally in both the fats and the feeders.
We've been comparing it to the put options, and we're finding that the floor is typically raised with the LRP, the strike price. You're gaining, a higher floor with the LRP versus a put option, and also a longer expiration. We did some comparisons. We gained an extra 20 days. So it made a lot of sense in comparing with a put.
Right. So we're getting more coverage. We're getting more term.
More time, yes.
More time.
And a little bit cheaper value.
And it's hard to beat that. What do you all think about cash settlement versus settling off of the futures? Advantage, disadvantage, just depends on your location in the U.S.
Location, definitely. The five area.
The feeder cattle market has been cash settled for probably over 20 years now, so we're used to that in the feeder cattle market. The cash settlement is a little bit different in the fat market, but people are very familiar with the 5 area cattle settlement, so it's not going to be a big adjustment for people.
Excellent. Well, Nathan, Lisa, thank you so much for the time today and walking us through some of these ideas on LRP and the options market. And we really appreciate you all filling us in with your background and your experiences. At this time, if anyone has any questions, feel free to reach out to either of them individually, and I will allow you all to read off your contact information, please.
All right. Well, first of all, thank you, Ian, so much for having us on your program here. It's been a pleasure working with you. And if anyone has any further questions or wants some further information, we'll make this, we'll explain this better to you. It can be reached at 1-800-777-4278. Thanks again, Ian.
Thank you,
Thank
Nathan.
you for having us, Ian.
Yes, thank you all so much. Appreciate your all's time very much.